You need to watch this if you worry about your portfolio getting rocked by politics. Gold shrugged off a sharp sell-off, but is the bull intact? Here's the quick breakdown. Gold steadied in early European trade after a wild week. Futures up about 1.3% at roughly $4,270 an ounce spot. Gold near to $4,257. That follows a brief slide from record highs above $40,300. Why the dip? On Friday, President Trump softened trade rhetoric toward China, said a 100% tariff would not be sustainable, and hinted at meeting Xi in South Korea. Stocks rallied, risk appetite returned, safe haven gold got knocked back as traders pocketed profits. But don't write gold off. Big banks are still very bullish. HSBC said $5,000 an ounce by 2026, pointing to lingering geopolitical risks, more money flowing in from institutions, retail investors buying gold. Goldman Sachs lifted its 2026 call from $4,300 to $4,900, citing strong ETF inflows, central bank buying. So what's the takeaway? The short-term pullback looks driven by improving risk sentiment. Trade talk headlines can move gold fast. The medium to long-term story, structural demand, central banks, ETFs, uncertainty around geopolitics, uncertainty around U.S. policy. Analysts say this correction could be a buying window for investors wanting a hedge against instability or currency downside. Expect volatility. Headlines will keep dictating intraday moves, but the bullish trend may still have room to run if political and economic risks persist into 2026. Quick checklist: prices recovered but aren't back to peak. HSBC targets $5,000 by 2026. Trump's trade comments caused a short-term sell-off. Long-term demand drivers remain solid. Want more bite-sized market updates? Hit follow and I'll keep you posted.